So let's start off with some fundamentals. As always, we're going to start off with some vaccine news, go into some UK news, US, and then we'll head over to gold and kind of discuss that a little bit. So with vaccines, we see that some vaccines help nations exit the pandemic faster than others. And what that essentially means is, as we go down, that now they're finding out that certain vaccines are actually more effective than others. So this is kind of giving us a little bit of a mixed sentiment that some people or some places have fully vaccinated their population and are experiencing a decrease in cases, whereas other places, so such as Israel, new cases are declining as vaccination spread, so as more people get vaccinated. And then there's other places where they are vaccinating their people, but with a different vaccine than, for example, they mentioned down here, Moderna, Pfizer, BioNTech, Johnson & Johnson. So they're vaccinating their people with different vaccines other than those three. And those vaccines are less effective in controlling those infection cases. So even though in other places people are still getting vaccinated, the infection continues to increase or even reach new highs. So COVID overall is still being viewed as a threat. And until majority of these countries can receive access to more effective vaccines, the fear or the market uncertainty is not going to decrease. And it's bringing back investors, and it's not going to bring back more investor confidence into risk currencies, but it's taking that investor confidence and it's putting it more towards commodities and safe haven currencies instead. Any questions so far? Okay. And so the type of vaccines, as we go further down, the type of vaccines are going to dictate whether or not the countries will be able to reopen their economies and whether or not the countries can ease their restrictions and policies. So it's going to affect exactly which vaccine does a country use is going to affect everything from policy about mask wearing and social distancing to lifting border restrictions and reviving their economies. As we go further down, we see that although that there's differences in the types of vaccines being used and their effectiveness, there's also this one common piece between all the vaccines, and that's that they're bringing down the pressure on hospitals. I'm just skimming through this so you guys can just take a look at a couple of different charts and data points that they have, but they all have one thing in common, and it's that they're taking the pressure off hospitals and medical resources. So even though some vaccines are not as effective as the other ones, they're still helping in bringing down those numbers of people who are becoming severely ill or dying from new variants and the virus. So this is bringing a little bit sign of optimism. So you have that little market uncertainty and market fear, you could say, from the fact that, well, some vaccines are effective, some vaccines aren't effective. So you're having that market fear from there. But then you also have optimism, well, at least people aren't dying, right, at this point, or they're not getting severely ill. So even though it is less effective, it's still helping taking that pressure off of the hospitals and the medical resources, which is exactly what we need in order to start getting control of this pandemic in the different countries. Any questions on this article? Again, this will be sent in the Discord. All right. Let's go ahead and move on to the next one. So now we're going to come into COVID and UK mix. So now COVID is launching a COVID booster study to test their third vaccine doses. So they're trying to give a booster shot to people. And what's happening here is that we're talking about, all right, well, what's the plan of the British government or Britain's government of how are they going to control their numbers? How are they going to control their cases as they reopen the economy? So this seems like this is the first step, or one of the initial steps, I should say. Actually, it may not be the very first one, but initial step into trying to control those cases even after opening up the economy. So they're trying to plan to ensure immunity even after reopening their economy, which is a trial of 7 vaccines to see which one can generate a successful immune response as a booster dose in those people who have already received those 2 shots. So people who have already received their 2 shots and then giving them a third one to see if that's going to kind of help them with their immune response to the new variants as they come out. So they are still planning on reopening the economy on June 21st. We saw news a couple of days ago where there was their sentiment around slowing down or delaying the reopening of the economy because of the new variant, the new Indian variant that was found in the UK. But now it seems like they're still on track. They're still going to try to reopen the economy on June 21st, but they're taking some of these additional steps to see if, their population, if they can give their population a booster shot and things like that to help them become a little bit more immune against the new variants. But now the main questions that we want to see being answered are, how is their population going to respond to this? Will they be willing to take an additional shot? Because we already know that when talks about 2-dose vaccines came out, there were some people who were reluctant to it, who didn't want to take 2 shots, who didn't want to wait that long, and who didn't want to experience the side effects, for example, of the second dose for certain vaccines. So now we want to see, well, are these people going to be willing to take a 3rd shot? So right now it says those who received the 2 doses developed by Pfizer, for instance, can receive a 3rd shot by AstraZeneca. And the 4 other vaccines that are being studied are kind of listed right here: Moderna, Novavax, Johnson & Johnson, and CureVac. So they're going to do a study, and the booster shot's going to be given at least 10 to 12 weeks after people have received their 2nd shot. And they're going to try to monitor these people. And the trial is going to include just under 30,000 participants ages 30 and over to see who will start receiving their booster shots in early June. And then June 21st is when they're planning on reopening the economy. Everyone good so far? All right. And then we have more news coming out about UK's confidence in the vaccines working against the variants. So this is really where conflicting news comes in. So a few days ago, there was news about the Indian variant being found in the UK and the potential threat that it could pose to the reopening of the UK economy. And now Prime Minister Johnson is coming out and he's showing optimism around the current vaccines being effective against all variants, and they say including the Indian variant as well, right about here. And so with that being said, now what we're seeing is more optimism around reopening the economy, more optimism around the current vaccines. We have optimism around UK launching a booster shot study. So now we're seeing that the government's stepping in and they're trying to make sure, and they're trying to take every step possible to make sure that their medical system, their healthcare system does not overheat again, or that they don't have to go back into another economic lockdown, any of that, right? So they're really trying to prepare themselves in order to have a better reopening of their economy and keep that sustainable, right? They don't want to go back into a lockdown, and making sure that every step forward, their population is going to be protected against the new variants, because they know as they open up the economy, and especially if they start opening up international travel, there are going to be new variants that will be coming out. So with the surge of testing, they're starting to increase their testing with the new variant that came out and that was tested, so that the cases have increased by a few hundred, but they are increasing their testing. Now the downside here is, or what's the conflicting thing here is, that even though they're increasing testing and they're trying to make more vaccinations available, the vaccines are not going to be offered to those who are 35 and younger. And so the next question to ask here is, well, what if someone who's younger than 35 gets affected with the new variant? Then how are you going to treat that? Is there another vaccine that you're working on, or are you going to approve another vaccine that you could use on those who are younger than 35, and that vaccine is going to be effective against the new variant? Any questions so far? Everyone good? All right, and then we have some optimism coming from the UK side, and then now from the EU side, we have optimism coming in as well. So we know that Europe was behind the UK and the US in terms of mass vaccination, even talking about reopening their economy. But now they're starting to reopen small parts of their economy by allowing quarantine-free travel for vaccinated tourists and visitors from quote unquote green zones, which are countries with declining or safe amount of cases. So this is bringing in optimism for the Eurozone, and any of these improvements or new updates are going to bring in more investor confidence uh, into the euro. And it also, as we go further down, so unvaccinated travelers can avoid quarantine if they come from countries that have controlled outbreak. And then as we continue back down, there's talks about travel within the EU. So there's actually negotiations that are going on between the EU governments and the European Parliament, and they're looking to come to some sort of agreement between the negotiators on Thursday to see, well, how are they going to be, how are they going to approve the travel within the EU itself? So is it going to be quarantine free, or how are they going to be pretty much going forward with this? So we have optimism from the UK side, we have optimism from the Euro side. Now we're starting to see economies slowly starting to open up again. Even the economies that were kind of behind, they're picking up pace in their mass vaccination. They're starting to reopen parts of their economy. Now here, what we have is optimism coming from the US side as well. So some more news or some more optimism starting to pick up. But this is going to be kind of a mixed fundamental here where the Federal Reserve officials, they're signaling open to taper talk at upcoming meetings. So in June, they're going to meet again. They're talking about, or they're going to be debating on whether or not they're able to scale back on their massive bond purchases as early as next month. So this brings in optimism because it shows that the economy is starting to recover, and the Federal Reserve is starting to talk about, well, now we don't need to keep injecting money through these bond purchases, and scaling back on that a little bit, and even stimulus checks and all of that, right? So they need to start seeing some more improvements before they can actually start implementing some of these things. As we go further down, so they're going to start talking about employment here a little bit, and then as we go further down, it says that the interest rates are still near zero. It's about 0.25%, and they're pledging to continue buying $80 billion worth in treasuries and $40 billion in mortgage-backed securities every month until there's substantial further progress, which essentially they're talking about employment and inflation goals. So in March, they saw that there was a significant increase in employment numbers, which means that declining unemployment numbers. But in April, they saw the same data decreasing again. So whereas they saw improvement in March, they saw declining in April. And then that's when Biden also announced the projected assistance to help employers, and said that if a worker is offered quote unquote suitable job, then they should take it, or else their unemployment benefits would be affected. And that shows that the labor market is still weak, and the government still needs to support the labor market in order for them to see any sort of growth. So posted strong gains in March, and then in April, they saw a decline in that as well. So they're starting to see some progress happening, but they're saying that, okay, we are projecting some good progress here, but we need to start seeing actual data coming out. So that's where we were talking about a couple of breakdowns ago, where we were talking about the Fed needs to see at least like 4 to 5 to 6 months worth of strong data coming out consecutively. And that's when you start seeing discussions about whether or not they can pull back on their asset mortgage-backed securities purchases and their bond purchases, whether or not they can start moving towards contractionary monetary policies instead of expansionary policies. And as we go further down, we still have the inflation concerns, right? And so these inflation concerns are still causing investors to move from the risk currencies and go back into safe haven commodities again. And so the projected actually inflation for the most part, we've always stayed above 2%. If you go as back as 3 decades ago or even further back, for the most part, the United States really hasn't had trouble hitting that 2% mark. We've stayed above 2%. But now that's where we're having talks about where a lot of the people are actually comparing the 2021 inflation outlook to what happened in the 60s and 70s where we had hyperinflation. So that's causing some market fear there. But the Federal Reserve is saying, like, look, don't worry about it. We've already learned from the 60s and 70s. We're not going to make the same mistakes. And they keep saying that we have the tools to fight against inflation. But now, as inflation increases, the investors want to see, like, what are the tools that they have? What are they going to use to fight against inflation? Any questions? All right. And then there's 2 other articles. So we have gold, and both of them are about gold. And now we're starting to see that more investors are coming into gold. So from a technical perspective, we've already hit that 1680 mark, which was the previous yearly resistance. That price broke above. We've already come back down. We've already retested it, and we've already broken that bearish structure on the weekly time frame. Now we have news that's just helping us move further along to that 1900 mark or even that 2000 mark again. So now we see that gold is holding near a 4-month high as investors are weighing in the Fed minutes. And more specifically, it's the fear around rising inflations, and also the coronavirus cases are increasing in some countries. So now the investors, they're moving from risk currencies, and even in the next article, we're going to see cryptocurrencies, and they're moving back into gold to hedge against inflation and the coronavirus cases and market fear. So in the next article, and you can see this on CNBC, you can see it on pretty much any other website. This is Business Insider. But now we're seeing that big investors, institutional investors, they're switching out of Bitcoin and into traditional gold as inflation fears heat up again. As we go further down, so now we're seeing that a lot of the people, they have compared Bitcoin to the new gold, the millennial gold. But clearly, whatever's been happening in the crypto market shows that gold is always going to remain gold. And another reason for that is because cryptocurrencies right now, all the cryptocurrencies that we have, they're denominated by their own unit of account. So that means that I can't walk into a bank and I can't give them a Bitcoin and say that, hey, give me like dollars instead, right? So it's all on its own account. And now we're starting to, a lot of the institutional traders, yes, they've entered, and a lot of the institutional investors, they did enter at some point into Bitcoin, but now they're realizing like, okay, well, there's a pullback and all, whatever's happening. Now they're moving back to gold. So that kind of just goes to prove that no matter what, you're always going to see investors coming back to gold and safe haven currencies whenever there's any sort of market fear, uncertainty, market corrections, anything like that. Any questions on the fundamental side? It makes sense for everyone? All right. So let's go on to Forex Factory and then look at it from the beginning of the week until now. So really quick, before we go into Forex Factory, just a review of some of the important stuff that we're seeing is on Thursday, we're going to have the European negotiations trying to come to some sort of agreement. So you have that to look out for in London session. It is going to be London session pretty soon. So you have that to watch out for. And then we also have some UK news coming out. PMI and all of that. All right. So looking at it from Sunday until now, looking at Japan PPI was pretty good compared to the previous and the forecast. This is the producer price index, leading indicator of consumer inflation, because when corporations raise the price of their goods, the higher costs are usually passed on to the consumer. So this comes back to the Walmart example that we always talk about. As we go further down, a ton of FOMC members speaking, and then you also had 2 MPC members speaking on Monday. And it seems like the data is still pretty good for GBP on Monday pre-London session, where you had claimant count drop. So you always want that less, because this is a change in the number of people claiming unemployment-related benefits during the previous month. So in April, we actually had a lot less people filing for unemployment compared to the forecast. The unemployment rate has also dropped by 1.1%. And then you have pretty mixed Euro news coming out, or Euro data coming out. And then as we go further down, let's see here, GBP news, for the most part, still pretty strong. So you have strong data coming out of GBP, and you also have strong fundamentals and optimism coming out from an economic perspective as well. So the COVID, and then also the economy's opening up and all of that. So pretty good data, bring in more optimism, bring in more strength for GBP. As we go further down, crude oil inventories just decreased a little bit, not too much. And then going into our London session, you have MPC members speaking, and then you also have the industrial order expectations. So if you're trading GBP, this is what you want to watch out for in the middle of the session. And then going into New York session, you have unemployment claims. So again, watch out for this, because this is what's going to prepare you for NFP news that comes out on the first Friday of every month. And then on Friday, you have a ton of PMI news coming out from the Euro, from GBP, and from the USD here. Any questions on fundamentals before we move on to technical analysis? All right. So let's start off with gold. We've retraced almost the entire bearish move that we've had this year. So let's take a look right about here. So around 1680, we've already tapped into that level. We've already rejected that level. And this was the previous resistance on the yearly time frame. So we rejected this entire area, pulled back, and then this was another area, strong area, as we dropped down to lower time frames. So right into that 1800 mark is where price made this top wick rejection right here. So we've rejected the same exact area once here, twice here, and then we created a resistance right at 1680, and then we saw a pullback happening here. And then you have that current yearly resistance right around this area. So you could also do actually the top of the wick here to the left, or right above the candles, any of that. This is an entire zone, so anywhere 1900 to 1922, any of that. So this is a entire zone that's being created right around here. Let's drop down to the quarterly time frame. So on the quarterly time frame, we've had this little support that was being or resistance that was being formed here. You got a little bit of a fake out, push back down, and that's the same exact area where price made a support. And this quarter, if you look at it, we didn't even have a bottom wick rejection. So as soon as the quarter opened up, there was a ton of bullish momentum. We're continuing bullish. We're coming close and tapping into this 1900 area, which is also that quarterly resistance. So once we tap into that, I do expect some pullbacks to happen, and we need fundamentals to support this move. So at the moment, we have fundamentals that are supporting the bullish momentum. So you're getting that from the inflation expectations. You're seeing that from the rise of coronavirus cases. You're seeing that from the tensions in the Middle East. And then you also have the cryptocurrency retracements that have happened recently in the markets, which is causing a lot of the investors to move from cryptocurrencies, risk currencies, the stock market, all of that, and move right back into safe haven commodities and currencies. As we look at the monthly time frame, so we did break out of that bearish trend. Now we're tapping into the same exact liquidity area that price has respected for about 4 months in a row. So you have that top wick rejection, that's first month, second month, third month, fourth month, and that's the same exact area where price keeps rejecting. But right after that, you see a ton of volume that follows, right? So we're going up and we're tapping into the same exact area, liquidity area. For any position buy opportunities, you definitely want price to break above this and then continue back up and probably tap into about 2076, so 2076 area, 2080 area. So this is the next level after price can clear this out and clear out about 1975 or 1980. So this is the next level for price for any position trade opportunities. If you're looking for sells, so let's do this 1980 flat. And then if you're looking for any sells, obviously wait for price to kind of tap into this area, reject it, and then I think we can come right back down I do think we're going to be mimicking a lot of the momentum or the movements that have happened here in the past. I think we're going to do the same exact thing here, where price is just going to continue consolidating between these areas until we start getting some more positive news. So we're already getting some positive news in the sense that economies are starting to open up, international travel is starting to open up. We're seeing more research being done around COVID vaccines and all of that. So I think essentially when all the economies that start to open up, the developing countries that start to get some of the better vaccines or the more effective vaccines, and the cases start to decline significantly to the point where COVID is no longer looked at as a threat. I think that's when we're going to pull back below the 1680 mark and come back around the 1500, 1400 areas. But until then, I think price is going to continue fluctuating here. Looking at the weekly time frame, we've had price break out of the bear structure. We got a retest right into this area. And now as price is surpassing some of these important levels, I would like to see another retest happen. So this weekly candle is going to close in about a day and 18 hours. So if we can close bullish this week and next week, maybe get a bearish candle close here, and then continuation up, maybe to tap into 1920 or even higher, coming up to 1980. I think that would be a better entry to the upside. If not, and bearish close right here, get a retest. As long as price breaks above 1900, those are buys. But if price continues to reject 1900, I think we're going to come right back down and try to respect this 1800 mark, which is a strong support level, but on a weekly time frame, we did not come back to reject it. We only have a bottom wick rejection. We still need to come back and do a bearish rejection here and then maybe continue back up bullish. Make sense? Any questions? All right. So let's take a look at the daily time frame. So even on the daily time frame, we've had this bearish trend. Price finally broke out of it. We see market collecting orders. So that's the little retest candle that we saw on the weekly time frame. So we see the market collecting orders, and then we see price pulling back after tapping into about 1840 level, 1830, 1840 level, which is another important level as you look to the left right here. So that's where we saw price reject that and then give us a pullback, respecting this resistance to the left and then continuing up bullish. But now if you look at the previous 2 candles, 3 candles on the daily time frame, we're starting to see that price is starting to react off of this area here, right? Where price has made support and resistance levels in the past. So now we're starting to see price react off of this. And what I would like to see is price pull back, give us a respect of the 1840, the 1840 level right here, respect this, and then continue bullish. That way, we will maintain this pretty much bullish structure. So you will have that new higher low and then continuation up. And I think this is another optimal entry for a buy opportunity to the upside to 1900 flat. So once price can come back and reject this area and continue bullish, I think 1900 up to 1920 is a good target area. But again, once price taps into 1900, we want to make sure that we're waiting for proper confirmations, because we could get very nice sell opportunities coming back down to 1800 flat. Any questions about that? So those are your 2 swing trade opportunities. A pullback, respecting 1840. That's your first swing trade opportunity. And if price can successfully break above this current level that's rejecting about 75, 1880, if it breaks above that, then you have successful buys. But either way, even if you do get a pullback, as long as price can respect 1840 as a support, then you have another swing buy opportunity to the upside. So this is the optimal situation that we're looking for. Let's go up to the 4 hour. So now on the 4 hour, we're starting to see some consolidation happening. Let me zoom in a little bit more. So we have a bullish structure from down here. So you have a nice bullish structure from 1680, price pushes up, pulls back, and then you get a higher low, continues making higher highs and higher lows along the way, comes back and essentially retests the structure. So we see a retest of structure as price continues bullish, and we see the market collecting orders. Right now, we're kind of stuck in this little consolidation area on the 4-hour time frame, which also tells us that there's going to be a ton of volume that follows once it does break out of it. As of right now, from a fundamental perspective, we're getting a ton of bullish momentum. We're getting a ton of optimism from fundamentals. So there's a very high chance that price will continue up to 1900. Now you're going to drop down. Once price breaks out of this, you're going to drop down to the 1 hour, 2 hour, 30-minute, 15-minute time frames, whichever ones that you use. And you're going to look for some sort of break and retest to be formed down here. So today we'll actually drop down to the 2 hour and the 30-minute. So now what we have happening here is price consolidating right into this area. You got that little break and retest, but it's within the consolidation. So you definitely want to wait until you can get a break and retest right above this and then continue back up bullish. So that's on the 2-hour time frame. Now we're going to drop down to the 30-minute. You have the first bearish close. You want that bearish close to come back down here, reject somewhere right into this area, which was a resistance in the past, reject into this area and then continue back up bullish. And that's your buy opportunity to the upside, with partials being somewhere in this area up top, and then runners going up to 1900 flat. Make sense? So this is going to change as you go into London session. So make sure that you're watching higher time frames, 4-hour, 2-hour time frames for further confirmations before you take any of these trade opportunities. Let's go ahead and move on to GJ. So we know we have optimism coming from the UK. You got that minor resistance being formed on the yearly time frame right here at that 152, 100, 200 level, any of that. So 150, 152, 100, right into that, you have that resistance that was broken. So I will make that red. When we drop down to lower time frames, we'll know that that was an important level. And now price is coming back up to fill the top wick created right here. So around 156, 500 area. So coming back up to fill that, and the next stop being right about here. And 163, 300. So these are the key levels on the yearly time frame. And then you also have that support that was being formed, consolidation support on the yearly time frame that price is starting to break out of, which is that 139, 500. And you also have the all-time low that was being formed all the way down here at 119, 700, or even 500. Right underneath the closes. So 119, 500. As of right now, we're in a quite a bullish movement to the upside on the yearly time frame. We want to see, is price going to break out of this consolidation? And if it is, then the next stop being 163, 300. And after that, there's nothing really stopping it from coming back up bullish and tapping into the previous highs that price made before Brexit introduction. As we drop down to the quarterly time frame, you got that entire zone that price keeps tapping into over and over again. So nothing's really changed in this from the previous breakdown, besides the lower time frame. So on the higher time frames, we're still quite bullish. We are breaking above 152, 100. We did make that bottom wick rejection of these minor resistance levels of 149, and now we're continuing bullish. And from the current price up to 156, 500, we have about 200 pips that can be taken advantage of. And once that's broke, on the monthly time frame, you have a break and retest that's being formed. So I'll actually create a zone here. So when we drop down to lower time frames, we'll see exactly what the price is doing right into this area. So this was another resistance that price made. If you look to the left, it's the same area where price keeps tapping into over and over again until there was a fake out, and then you had a nice momentum to the downside. So that's the same area where price made that break and retest. It's continuing bullish. It's already filled a wick here to the left. It's coming back up right into this area, 156,500. As we drop down to the weekly time frame, we see that price made a support right here. Another fake out comes back down, and that's where we got that retest of 149 flat, and then a nice bullish run up. So as you can see, price still needs to come back and give us some sort of corrections right into this area on the weekly time frame. So if we look to the left, let's see what happened here. I'm looking at the current resistance that price is making right up top here. So right in 152,200, that's the resistance that price made. You look to the left, that's pretty much the same area where price faked out at and then came right back down, right? So we need to see a clear break above this for nice buy opportunities. If not, let's say this week the candle closes bearish. Next week, we want to see some sort of bottom wick rejection and then continuation up for buys. If you don't get that and price just breaks the low, we are coming back down to 152,100 for about 146 pips in order to reject this area that price broke above. Make sense? Did I lose anyone? Yes, no? All right. And then on the daily time frame, now we're starting to see exhaustion. Right now, we're starting to see that downtrend starting to form. So you have price right above 154,200, which was the weekly resistance that price made. And then now you're seeing that little bit of a fake out, and now price is trying to come back down. So at the very minimum, if you're looking for any swing trade opportunities, let's say you're only using the weekly and daily time frames, this is the level that you want price to break below, which is a 153,800. If price can break below that, then there's really nothing stopping it from continuing down. And you can essentially take your first partials, let's say your entry somewhere here, your first partials at about 60 pips or so, and then a continuation down with obviously more scaling opportunities, continuing down for about 170 pips. On the 4 hour, let's take a look at this again here. So if we're just looking at structure from 149 up to the current price. So just looking at structure, what we've had is a low being formed. So you got that rejection, continuation up, you got high being formed here, comes back down, we're tapping into some equal lows, but overall the market is simply consolidating. Once it's done consolidating, testing the structure, that's when you see a bullish run up. You see another consolidation happening overall in this area, right? So this is the overall area, then you have another bullish run up, and this is where the market exhausted. So at the moment, price is pulling back down. You see a major bottom wick rejection. We're sitting right into the same exact area. Now, if the price can continue back down bearish, we're looking for price to break below 153,800. Once this area here is broken, then there's nothing stopping it from mimicking this bullish trend to the downside to 152,100. And now if you're looking at, let's say on the 4 hour time frame, clearly that's going to be the break of the bullish trend, right? So now if you're looking at it from a structure perspective on a 4 hour time frame, what you want to see price doing is after it breaks below 153,800, once it breaks below this, you want to see price giving you a break and retest, right? So price breaks below this, gives you some sort of retest and continues down. That's exactly what you're getting right now. If you were to look for any scalp opportunities, you saw a bullish run up, price breaks out of that, and it's giving you a retest right now. Price clearly made a resistance right into this area, and now it's coming back down. But this is only for scalp purposes, this entry here, because there's a very high chance of price reacting off of 153,800 again. So this is where you want to be very careful when you're looking for any trades. This is where you want to look for higher time frames and align them with your trade opportunities on lower time frames. Any opportunities to take a scalp and turn that into a swing trade, they're only below this zone. They're not up here, right? So you want to make sure that this is only a scalp opportunity, and if you're looking to turn a scalp into a swing, this is where your opportunity is. Make sense? Any questions?
Vijay, if I look for sells here, so I would expect a 4 hour close below that 800 level, and then go into the lower time frame and then look for break and retest and then enter.
So you're gonna wait until a 4-hour candle closes here. A next one can give you a top wick rejection of this zone, and or a bullish close here, and the next one continues down.
Okay.
Make sense?
Yeah.
All right. And then even for this one, we can drop down to the 2-hour. So here you see price again making resistance right into this area. Right here, making resistance, is starting to drop back down. Wait until this 2-hour candle closes in about 46 minutes or so. And the next one, as the next one continues down, then you have a scalp opportunity coming down to 153,800 or even lower than that, and mimicking down here. So after that, if you're scalping and you're looking for your 10, 15 pips, this is your 15 pips with runners coming down to about 30 pips. And then after that, you're looking for a break and retest on higher time frames and continuation down. And you could have about 185 pip trade. That is given if this 148,200 level here is respected. If the market just consolidates here for the rest of the session, for the rest of the week until let's say Friday when PMI news comes out, then this is just what you're stuck in. This is just the scalp. There's no scalp turned into a swing trade opportunity here. Once this 154, 200 level is broken, then we're looking for more buy opportunities to the upside, and that's when we target the 156, 500. Any questions? All right, everyone's good. Everyone knows what they're looking for in London session and in New York session. All right, awesome. So I will see you guys for London session in a few hours. Other than that, I will, take care, and then we will see you in tomorrow's breakdown.